Welcome to the EconBros podcast, and we have a special guest here, and his name is Fred. So do you mind just introducing yourself and just let everyone know?
Sure.
Yeah.
My name is Fred Hubler. I'm the CEO of a company that I started 20 years ago. And it was a normal company until about 5 years ago, and then the hockey stick happened. I was speaking. You were there at the event I was speaking at, and we've been friends ever since.
Yeah. Hey, he's a good friend. So basically, what the questions we're gonna ask are gonna be around wealth management. He's gonna give a lot of career advice because he does work in that field, and for our audience, that would be great. So first question is, what inspired you to pursue your career in that industry?
So I wish I had like a very politically correct answer.
Yeah.
I grew up always wanting to be rich. I grew up in Delaware County, Pennsylvania. I still say water. And, they make jokes about it on Saturday Night Live, so it's coming from somewhere. And I always felt the rich, and we weren't rich, and I always felt the rich got richer because I really thought they knew something that the rest of us didn't. And it's true, and I'm here to share with all your listeners, what I found out along the way. And so that's stick one pin in that. I thought I'd going to be an executive. I went to school. I got my MBA. I know I look a little bit like Michael J. Fox. I looked even more like him when I was younger. And at the end of the day, I went the executive route and worked at a Fortune 500 company. And at the end of a Y2K project that I was in charge of for all North America, the raise I was promised didn't happen. The promotion I was promised didn't happen, and I felt cheated. I felt angry, and I knew I wanted to do something on my own. And I kind of wanted to be like a doctor, where you'd have really good, deep relationships with a few people, not 1,000 people, and not an 800 number where you never talk to the same person twice. And I don't like bodily fluids, so I couldn't be a doctor. Financial services was the next best thing. I was always the guy playing with stocks. My friends would change my oil, and I would buy them, stocks on E-Trade, and use my mom's social security number to get in there because I was too young to be on it. So that was always my thing, and that ended up being a career that I'm in for 25 years. So it's nice, but I wish I had like this grand plan. As Mike Tyson says, you have a grand plan until someone punches you in the face. And I was going to be that little executive with the briefcase flying the corporate jet. And it didn't happen, and I'm okay with it didn't happen because I ended up okay.
Yeah, great story, but yeah. So how did you break into wealth management, more specifically that industry?
Sure. And one of the things I like to do, like hardworking but lazy MBA. Like at the end of the day, you shouldn't have to reinvent the wheel for most things. And so when I'm looking at where I could start, I had to get my license. I had to get some sort of training, my corporate training, my MBA, my finance degree. None of that helps you sell a mutual fund. So of everything out there, one of the places that are still out there, and again, it's not a bad career path for people to start, Edward Jones. So I'm like, okay, I can start my own office. It was like a franchise, but you didn't have to put up money. The part I wasn't exposed to until I was already in it was literally, and I don't have to do it anymore, you literally had to door knock, like go door to door, like Jehovah's Witnesses. And that is very uncomfortable for everybody. And I remember doing it, and it reminds me, remember see those horror movies where they zoom the camera in and pull the camera out at the same time? Well, when you're walking down a driveway that's not yours and you don't know whose driveway that is, you see that tunnel vision. You're like, you're questioning your life's decisions every door. And it got easier, and I'm okay talking to people, but no one is okay having someone knock on their door. So when I do get the guys, coming to sell knives or whatever, I see them on the ring. I know I have the choice of ignoring them or go talking to them. I tell them I'm not going to buy anything, but I appreciate, the chutzpah it took for you to do this. So I'll hear your spiel. But whatever you're selling, I don't need. And we have a good conversation, and I don't buy, but at least they didn't get the door slammed. But I had people giving me the finger, people leaving their, letting their dog out after me, and I was just saying, hey, I'm opening up an Edward Jones office. I wasn't trying to sell mutual funds. I was just trying to get who my neighbors are in the office. So that was the beginning of it, and since then I lasted about 2 years. My first day was 9/11. So I know all of us are now going through almost like a 9/11 every 3 years, like something different. That I'd like to live in precedented times. You always hear about that we're living in unprecedented times. I'd like to go back to like regular times if that's a possibility. So the fun part is just how much things have changed, both what I do for a living and what the industry does.
So was there any like like failure moments or any like pivotal moments, successful moments that kind of just change your like path towards your industry?
Absolutely. If you want to talk about failures, we can have a 3-hour show, and I'm sure you'll lose all your listeners, and I'll put you to sleep. So the big top 10 failures, not even going to go top 10. At Edward Jones, I had an office, and the landlord of my office came to clean the office every Wednesday. And I knew he was older, and I knew he was rich because he owned the whole building, and I'm just, a couple cubes there. I had a few offices in a bigger building that were all my Edward Jones office. And I asked him, what did he do for a living? Because he's obviously retired. He probably was in his late 60s at the time, so drove a beautiful Mercedes. And he asked me, he's like, well, what's the biggest margin product you have? And I didn't know, because Edward Jones was, want to buy bond, want to buy stock. What's your favorite color? Do you have kids? You need a 529. You have gray hair. You need an IRA. Like, it was very transactional. And I'm sure they all are. So I'm going to stop blaming it. I'm sure they all were. And I'm like, I don't know. He's like, well, that's your first problem. So that began me thinking. And then I asked him, what did you do? And he did something that hasn't able to be done yet because of interest rates, but it's starting to get better at it. But basically, it's technical term, and since we're talking to college guys, I know guys and girls, it's annuity life arbitrage. So here's the math. For someone like in their 70s or older and healthy, at the time, I could get like a 75-year-old woman on a $100,000 investment, $15,000 a year for the rest of her life, and this is fixed. It's not a variable annuity. It's a SPIA, which is the kind of annuity they had in Roman times. So you give a deposit, and they pay you for the rest of your life, no matter how long that is. But the minute you're not there, the money, like whatever's left over, like let's say I get one paycheck and then die. If that's how you do it, you don't have any other money. Like, you lose that 100,000. So that's not the idea. Before you put it into the 100,000 into the thing making 15, you get life insurance, plain vanilla life insurance, the kind your granddad would have. No riders, no bells and whistles. And at that point, it costs 5. So if I'm giving you 15 for 100,000 of a deposit, but I'm giving, and it costs you 5 to replace that. So when you die, what you gave the annuity company goes away, but then the life insurance pays your family. That way you're not screwing anybody over. You're living off the difference. So I did not have, and so the mistake I made was not really a mistake, but it was a pivotal point. I realized right then that if my clients knew what Bob did, and Bob was retired, but if my clients knew what Bob did, they wouldn't be my clients. And to this day, I've had about 30 people tell me, hey, if my clients knew what you did, they wouldn't be my clients. So I've become Bob, which is really cool. And that began the theory of, what if there's more than stocks and bonds? So the mistake I made was definitely assuming that traditional ways were the ways that work. And I realized then that Bob made a ton of money, worked for 10 years. That's all he did. He did this for 10 years. He focused on, he had one play, and this was the play. And I'm a big Eagles fan, so he perfected the tush push, and it worked until he stopped using it and he retired. And I asked him to help, and he helped me. And I saw him again at the State Store, which is where you buy liquor in Pennsylvania. He remembered me. He didn't remember the conversation. And I'm like, Bob, you changed the trajectory of my life, because that made me leave Edward Jones, because I couldn't do it at Edward Jones. And I knew an investment that had a 10% return that was guaranteed and wasn't in the market. Why would I sell in a mutual fund? Why would I put them into any other thing? And that's not for everybody. Obviously, you have to have other money because you don't have any access to liquidity. You just get the income. So not only did it change my life, it didn't faze him at all. He doesn't even remember the conversation, but I do, and it happened. And to this day, I'm still, people tell me that they don't say I'm their Bob, but they basically say, what you've done showed me that there's more out there. Other mistakes, there's a ton of mistakes. I've tried a lot of things prior to even doing financial services. I quit school. I told my dad, and I don't know if you guys remember Ross Perot, but there's videos of him. He's running for president. He had a Gantt chart, a chart that would show, at the time it was all the jobs going to Mexico if NAFTA was, anyway. Okay. I was in college, and I started a business that did placemat advertising. So I would sell business card ads and give it to the restaurant. And so I would be making your Denny's placemat. You've seen it before.
Yeah.
But at the time, I had a Marriott account. So all the Bob's Big Boys were bought by Marriott. And and I had a lot of them, and I would give money to the American Cancer Society. We do the ribbon cutting. I had people that worked for me, and they come into the house and they ask to see my dad. And I'm like, my dad's at work. He's like, well, I'm here for the job. I'm like, you're here for my job. And I've always been comfortably, I got to be, and I think everyone else, needs to have a little bit of yourself comfortable being uncomfortable. Because I was 22 years old interviewing 50-year-old sales guys and going out and selling placement advertising and splitting commission. And a big pivotal point was, at the time I was reading the Wall Street Journal, like all good college kids and trying to do investments. And it talked about Marriott divesting themselves of core assets. So I called the VP at Marriott, who I was so honored he took the call and gave me and at the end of the day, I realized now that I'm much older, I gave him free stuff. I gave him publicity with the ribbon cutting. I gave him free placemats. If I didn't do it, he'd have to pay for them. So it was a win-win. Like I wasn't taken advantage of, but I called him and I said, I'm reading an article about Marriott divesting by divesting of non-core assets. You guys are a hotel group. Are you selling Bob's Big Boys? He's like, well, what do you think? I'm like, I think that's non-core. He's like, you're right. Anything else I can do for him? I'm like, yeah, how am I going to sell a placemat for a Bob's Big Boy if tomorrow it could become a Perkins? That's your problem, not mine. And hung up. And then I had an idea. I had a pivotal point, because I keep saying pivotal, but do I sell more placemat ads? If you're a banker and I'm selling you a placemat ad, and it might go away tomorrow, or it might last for the 15,000 impressions or the 15,000. And my dad, who's passed away now, but I am like, hey, what do I do? He's like, what can you do? What lets you sleep at night? And I never thought of it that way, because financially I had no obligation to unwind the business. Marriott has every right to sell their business. Like no one was screwing anybody over. Like it wasn't anyone was getting hosed, but I could not in good conscience take your money as an advertiser and put it on a placemat and pretend like, oh, I didn't know they were going to be sold. Like, and so I gave everyone their money back, and more than half said, keep the money. And I wouldn't. The other half said, what's wrong with you? Like, you're in business. You're basically unwinding your business so that there's a chance that I don't get all 15 placemats. He's like, but there's a chance that it'll take 5 years to sell to sell all the placemats, or to sell the Bob's Big Boy. What they didn't know, that I'll share with your listeners, is at the same, my mom and dad both were like, I had 1 semester left, and I was gonna quit school. And I showed them, based on numbers I ran that were bullshit numbers, that I was going to be able to make so much money, I'd pay their mortgage off and they could live in their own house for free. Like I was the man. And then my mom and dad said, listen, you can take the summer and 1 semester off, and at the end, move out. If you can move out and have a quality of life you like, great. God bless you. We'll support you. If at the end of that you can't move out and live on your own, you got to go back to college. And to this day, it's one of the most, they believed in me, but didn't let me screw myself over. If I was going to leave and become the next Facebook, I think they'd be okay with that, But if I was out there and not finish college and also not be able to move out, I had to go back to college. And that was an agreement I took 100%, because in my head, I'm going to be buying their house. I'll be buying my house. I'll have the jet ski with the girls and the cigars. I mean, I had all the money, but that also just assumed a straight, if I have 15 Bob's Big Boys, I can make double the money if I have 30. Life doesn't work that linear. So it was very good. And that was also in my mind, as I looked at the numbers, and after I paid all the sales guys, and even if we had a bunch of Burger Kings, which we had a lot of businesses, it was never going to be, I'd have to add another 0 to all the numbers. And that would probably add another 0 to all the expenses. I have to triple my salespeople. But the bottom line that fell to me, there's no scalability. I have to sell every placemat. I had 15 spots I had to sell. And so I went back to school because I couldn't move out. And, I never did pay off my parents' mortgage, but I did go back to college.
That's good. So, so how do you stay updated with all these like the economics? Are you the type of person to just look at the financials, the economics of, I guess, America or worldwide, global?
So I lived by the numbers up until about 15 years ago, when I saw how inauthentic the numbers are. And just moving it to today, the last 11 of the 12 job announcements get revisited ugly and revised uglier 2 weeks later, and that never makes the news. Ever. Now, I'm not saying it would not happen under the other guy, but I'm saying it is happening now, and it's happening very ugly. And you're being told, college is being paid for. Well, no, it's not. It's not being, they're just moving the money. So I started to not trust the numbers as much. And when I really started researching, and you guys can do it now, where do the people with money go? And that brought me to, and that what's created my company, that brought me to Harvard and Yale Endowment and their annual reports, which are public. So they're not forward looking. They're not going to tell you, hey, we're going to go buy storage or we're going to go into private equity, but they have to say, hey, last year we own the storage or we own this private equity. So if you ever want to know how the big dogs invest, look at the big dogs. And some of them are public, like Harvard and Yale. They have to show their annual reports. Take a look at the holdings. And about 70 to 80% is not in the stock market. So from being on top of things, we have enough clients. We're in 34 states. I ask the business owners how they're doing. One thing that I will give you guys as I want to make sure that if anyone's taking notes, Google CNR, the letter CNR, and the word speedometer. It's not my company. It's a third-party money manager that we have used. They have a free, you have to look for it, but it's on their website. Every month, they do a report of multiple economic updates, but it's a speedometer with red, green, yellow. So if it's green, it's good. If it's yellow, it's not so good. If it's red, it's bad. And you can see all historical speedometers, even going before 2008, and you can see how the dashboard is really a dashboard, starts to get wonky as things start to unwind and get real ugly real fast. Now, it doesn't predict, and the frustration I have is that if they talk about job employment or consumer sentiment, and then based on the numbers the government gives us when they release it, if later on the government releases an update that makes it even worse, places like that don't go back. Once they publish it for March, it's March, and March is locked in. So it's not nearly as, the markets and the numbers are not nearly as good as when you do the research, it looks like it, because when they get revised down, no one ever updates the publishing of the reports they did. But CNR, I think, would be the best. I still use it today. I can share it with clients. Everyone knows green is good and red is bad. Like, that's just how we think. So that would be something I would say if you're looking at it. The Wall Street Journal, I've been in the Wall Street Journal 4 times, and I used to read the Wall Street Journal like it was a Bible. And then I started to, and I grew up the X-Files, so trust nobody and all that thing. You would see, and this is even before Trump and before Biden, like it's going back, you would see a headline that would grab, worst numbers ever. And then when you read the body of the article, and it's probably not just Wall Street Journal, it's probably everybody, especially now. But back then you would read the article and it was, historically higher than average. Like, it was not as flamboyant as the headline news, and it's misleading. So I believe what really happens in the economy affects everyone in the economy. And if you talk to enough people, you find out what's going on. And so as long as you're not talking to just people in your neck of the woods, and you have, and so with 34 states, clients in 34 states, and all the vendors that we talk about, we ask them, hey, what's going on? And I take it with a grain of salt, because when I was at Edward Jones, right after 9/11, I had to drive to St. Louis because they weren't flying, obviously. And buildings were still smoldering. Like, there was still smoke for weeks in downtown New York. I was naive enough to call the sponsors, the guy that sells American Funds, or the guy that sells the annuity, or the guy that at Edward Jones, it was the bond desk. And I asked him, hey, what do we do now? And no one's ever done this before. Like, we've never lived through this. And no matter who I called and talked to, their answer was their product. So there is an element, I think, in the news world where they just need to get eyes. They need to get, and it's sort of an echo chamber. So I don't really subscribe to, hey, this is the Bible and believe it. I take pieces of everything and try to homogenize around what probably is most likely to happen. Not what I want to have happen, and not what we're being told. So somewhere between what you want and what you're told is the truth, and it changes no matter what. Does that make sense? So it's definitely, it's tough to be on top. And the weird thing is, and luckily I've slowed down a little bit because it's a lot stressful. I've been asked to be, hey, can you be on, Yahoo Finance at 12 o'clock and talk about the markets? And I don't talk about the market. I'm like, I'll talk about anything but the markets. Because if you have me on your market show, I'm going to tell you not to be in the market. Like, go in cash, get 5%, and go buy real estate, or go buy something that's not in the stock market. And I can't say that, and they'll never be invited back on Yahoo Finance or CNBC. So I'm always the alternative guy. I'm the what else is out there guy, which I'll talk about that. But it's funny, I'm almost always following some guy that is a stock tracker, and he's talking about the candlestick and the breakout. And I bite my tongue because, again, I'm in like a virtual green room. I can hear him, and I almost want to say, you're just reading tea leaves, dude. You're just, it's and the business of the stock market is a huge business. And if you think about how many tickers are actually out there, there's not that many. So the Harvard and Yale analogy we talked about 80% of where they manage their money and put their money is not in the market. And if you do the research, the Russell 2000 is an index. It doesn't even have 2,000 things in it. It used to. That's how the name came from. So the market itself is maybe 3,400 total tickers, and 1,200 is what everyone owns. And a good example of that, we had a client, $17 million, 4 different financial advisors came to us to do a review of everything. And at the end of the day, he was in the exact same stuff as the S&P 500. The amount that was, and if you have $17 million, you don't need a mutual fund. Mutual funds are for people who don't have enough money to make a portfolio. Yeah. And you tell someone worth $17 million, why are you invested like you're poor? What do you mean? Mutual funds are for people that couldn't scrape up the money to buy 17 different stocks. So they bought a $17 mutual fund that had. And it's a great place. Mutual funds are great. Obviously, Vanguard owns half of my county. So, there's money in it to be made. 17 million bucks, all match the S&P, the percentage that was held telecommunications. And I'm at the point in my career where I can say what I think, and I'm okay if someone says I don't want to work with you or whatever. And it's interesting. It's not that I have a chip on my shoulder. I'm just trying to be authentic and answer the question. So I told him, you don't need another advisor, and you don't even need me. I'm going to save you so much money. Put everything into SPY, which is the S&P 500, index, very low cost. And I said that because he was already in it, just 14. He was overly complicated in it. And he said, well, isn't it stupid to put $17 million in one thing? And I said, yes, and you already did it. And then I just let it pause. And I'm like, if it wasn't on a Zoom, I'd be afraid this guy's going to punch me. Because I just told a 17 million. 17 million wasn't what it's worth. That was just the portfolio. This guy was a baller. But no one ever talked to him like that. And the reason he had $17 million, he sat like this. He goes, what are you going to do about it? I got the job. I got the gig. And I got the gig because I told him, you invested with 4 different people and they all did the same stuff. And it's not their fault. There's only so many tickers they can buy. And if you buy a fund, look at the top 10 funds. They're all in the same stuff. Just different amounts. Some have more Microsoft, some has more Apple, but it's all the same stuff. So,
yeah. So I kind of want to transition into more wealth management because that's your career.
Sure.
You could talk a lot about it. And I just want to, just for a baseline, could you just explain what wealth management even is? And then after that, could you explain what alternative investments are? Because I know you're a pro at that, so yeah.
Yeah. So I think if a stockbroker is a guy you call or girl you call and they buy stocks, you don't need that anymore because you can go into E-Trade and do it without anybody. Yeah. So the industry evolved from being a stockbroker, hey, I have a hot stock or I have an IPO, to someone that's more than stock. So wealth management for us is the new version of a financial advisor should be a wealth manager. Because your money is more than just in your 401k or in your IRA. And the competitive places out there know that and want to service that. So there are financial advisors that will only tell you the advice for the 100,000 you gave them to manage. And that's fine. But wealth management to me is more than that. Because your wealth is more than just your stocks. It's your house. It's your, are you getting a good mortgage and how are you going to do college for your kids? All that stuff is wealth management. So it's a very broad brush. And it in that is probably some guys and girls that have insurance license and don't have any financial advisor's license, but they're trying to sell you annuities because that's what they can sell. And so wealth advisor, there's no criteria. Anyone can say they're a wealth advisor. Financial advisor, there's a criteria. Stockbroker, there's a license. There's some things there. But for me to explain it to the layman people, wealth management is just someone or either a company or a person that helps someone manage their wealth. Now alternatives, remember going back to Harvard and Yale, that 80% that's not in the stock market. Well, then where is that? That money is in things called alternatives. And alternatives are things that are not stocks, bonds, and cash. They're not mutual funds. Anything that's invested in stocks and bonds, that's not really an alternative. Private equity That's an alternative. Private equity is Richard Gere and Pretty Woman. One thing I can give everyone that's listening to you, go to Forbes.com, put in my name. You'll see my articles. They're free. If you can, you can read all the articles too. If you subscribe, you can get new articles as they're released. I only talk about alternative investments. So there's probably an inventory of articles that your listeners can listen to or read, and give them a primer on what I mean. Alternative investments, there's thousands of them, and no one has enough time to talk them, and they're always changing. But think of it as an investment that's not public. And if you ever felt like I did, the rich got richer because they knew things the rest of us didn't. Like I said, that's how I grew up. It's not only 100% true, it's a government program called accreditation. So you can't talk about alternative investments without layering the rules around it. And the rules around it are called the accreditation rules, which means I can't tell someone or recommend to someone they do an alternative investment unless I already know they're accredited. And accredited is $1 million of net worth, not counting your house. Not everybody, but a lot of people. Or if they're married, 300,000 of income, or 190 if they're single. So either the net worth or that income technically satisfies the accreditation. But that's only the beginning of the end. That's only the beginning of it, because then you have to work with someone who has access to the investments. So when I was at Edward Jones, or if I was at any of these big places, they don't have the same alternative investments I do now as I'm independent. And they don't have it for a good reason. These alternative investments go bad, some of them. They're illiquid. And like a scalpel, you can cure cancer or cut a jugular. So I'm a highly regulated, and most places want as many clients as they come in. If you have a pulse, you can open up a Vanguard account. I don't have that luxury. I have to source the clients. They have to be accredited, and then I can do my job. So it's a much smaller pool that I'm fishing in, but the fish are bigger, if that makes sense. So accreditation and alternative investments are really where Harvard and Yale are putting their non-stock market money, and most of the money is not in stock market money.
So how do you approach your clients whenever you want to give them investment ideas, or just talking to them about risks that could happen? How do you approach them, a one-on-one time?
Yeah, so risk is good, because there's a lot of things that are standard in the industry that are BS. So one of them is asking a client to describe what kind of investor they are. So let's say you're an aggressive young kid, got a long time ahead of you, you want to shoot the moon, you're aggressive. Well, that's not a number, that's a label. And your version of aggressive is different than my version of aggressive. And I think the industry does that to have some cop out, some CYA. So let's say your mother and dad are conservative, or growth, or income. Again, these are labels. The way we do it in our office, we found a software that you take a test, it's like an eye test. You like this portfolio, and basically at the end, you're going to get a score from 1 to 100. That's not a label. That's a score. You're 62. Obviously, it's like a speedometer. 100's riskier than a 1. And then wherever your money's invested, the software will look and see what's the risk of that stuff you're in. So you'll get a score. If you're a 62 and your portfolio is a 4, you need to turn up the heat of your portfolio. It's way too conservative. The other thing the software does is, with your current holdings, it'll show your best 6 months and your worst 6 months of the stuff you're already in. So risk is no one really cares about risk when everything's going up, but risk really matters when things are going down. So if you have a portfolio where the upside is 20 and the downside is 40, that's not a good portfolio. That is exactly what a bad portfolio should look like. And people don't know they're in it because it's still up 20, so they feel fine that it's going to be up 20. And let's say it goes down 40, and I'm your advisor, and you come to me and say, Fred, what happened? Well, you did say you were aggressive. And then I can have that, almost get a get out of jail free card. Real people with real money don't want to play that game, and I don't want to play that game. So when it comes to risk, that's one way we address it. We address it with science and math, and kind of say, hey, here's your score. You're a 62. Let's understand if that's really true. Are you really a 62? Because they're taking the test. They could take the same test 2 days later and be a different score. So I do consider the risk, but I don't make it drive the boat, because you may be, hey, I'm a 2 in risk, but you have no money. So we have to have some risk. So then they might go into an indexed annuity that has some, no downside and some capping. There's ways around it. For most of our clients, we carve out alternative investments and they sell themselves. If you're a high income earner, buy a tax credit and it reduces your high income tax. If you're a professional and you know you need more real estate, but you have a crazy job, or you're a doctor and there's no way you can also manage property, you can buy into real estate and own it as real estate using an alternative investment. So as long as you're accredited, and it is a sad part of my job, and that's why I run a food pantry that has, obviously not for rich people. So I do things for, I love you. You're not my target market. You might not be for 10 years. I'm not doing this for me. I'm doing this to give, because we really are restricted for the value we bring to the marketplace to only work with accredited investors. I'm probably not going to heaven to make millionaires more money. Maybe by running a food pantry. And I know we just did the math. We fed 300,000 people since COVID. That might get me at least at the door. I don't know if it'll get me in, but it'll get me at the door. And so that's the hardest part, is the people that need this the most are governmentally restricted from even knowing it exists. And that's why I'm writing for Forbes. The articles, I don't talk about I don't talk about the products, but I talk about what they are and why people would use them. So I'm not trying to solicit business for myself, just trying to educate. Because alternative investments are still what is that? Isn't that what Bernie Madoff did? Like, no, he was actually traditional. He just was lying about managing the money, but he was buying supposedly stocks and bonds and the things that were liquid. So he was not alternative. He was traditional, just a scam.
So this is gonna be I feel like it's a common question for most wealth management people. So how do you handle clients in times of recessions or economic downturns, when the emotions are high? How do you handle clients in those situations?
Yeah. Well, one, we build the portfolio knowing things don't go up all the time.
Yeah.
And if anything, things always go back down. There's nothing lasts forever. Up doesn't last forever. Down doesn't last forever. And so we always remind the clients, hey, these investments doing well. Remember, and here's the real strategy. If you don't have 7 years, then you shouldn't be invested, because there's no time frame in 7 years. Again, scratching off the Bernie Madoffs that were lying and illegal from the beginning. You pretty much, as long as you're in a balanced portfolio or a decent portfolio, not one stock like a JCPenney or a Kmart or something that goes bankrupt, 7 years, you're not going to lose money. Even if you started at 9/11, or even invest right before 9/11 or 2008 or 20, so 7 years is the break even. And what we do is time segmentation of money. You have money in a 1 year in one bucket. That's for the first 5 years. That money's super sensitive and super secure. It's not going to grow a lot because it's cash or short-term bonds or CDs. You can do it yourself outside of investing. And then you have a 1 to 5 year bucket, which is really, really conservative and liquid. 5 to 10, you can take on more risk. And the 10 to 15, you can take on even more risk. And the 15 out, that's where all the risk is. So when the market does go down, in our world, it goes down for the bucket that's the furthest away and was built to go down and come back up. You have way over the 7 years. So do clients like to lose money? Absolutely not. But when you pretty much triage and say, okay, the money we don't want to lose, or the money you need right now is in something that won't go down right now. And the money you need in 20 years is in something that is 20 years of ups and downs, and we're going to manage it. But you don't put it all in one basket, and you make sure the clients understand the risk of not taking a risk is a big risk. Because you put it all in cash, and you're the frog being boiled in the soup, because you don't know, you're not even keeping up with inflation. So that's one way. The other way is it's hard, but more important when it's bad news, just confront, don't run away from the client. Go and say, listen, here's what happened. Lay it out. And a lot of times we're fee-based. So if your 100,000 or your million went to 900,000, I'm making less money too. Now, that doesn't necessarily make the client feel better. Well, dude, I'm down. But I didn't sell them a commission product where I made all my money, and I don't care how it does. So there's a few ways to do it. To do it right, you need to make sure the client understands the risk and client understands not taking a risk. And then you take the biggest risk with the smallest piece of money that has the furthest to rebound, and you'll be fine.
Now I just want to shift towards another aspect. It's gonna be, so this is more advice towards people who are just got an internship or a job. So how do you balance personal life and work life? How do you balance that? Especially for you too, because I know you are a CEO. So.
Probably not well. And I don't think you can't turn one off and turn off. I think you need to be present when you're doing whatever job it is. So if I'm doing a dad job, I want to try to be present. Do I still look at my phone? Yes. I can't not, because I wouldn't have what I have if I wasn't responsive to clients. But after 5, I can't do anything. The market's not open. I can't send you a check. When I worked with the NFL players, they would, them or their wives would call and say, "Hey, can I have some money? I'm at the casino." I'm like, "Yeah, like in 2 days, because I have to sell the investment." Like it's not like I'm sitting on it and here's your money. So you have to work on it. I think there's a few different answers. 1, you have to work on it. 2, you can't be perfect. And 3, your calendar is your only protection. So I carve out lunch with my wife on a Monday, and I work from home on Monday. I'll try to carve out not doing anything really big on a Saturday, or if I'm away for a business trip, I try to bookend it with dinner with the family before I go, and then something fun at least some point when I come back. But I think saying that after 5 you don't work, that's not the way this life works. That's not the way our clients want, and it doesn't really move the needle, because at the end of the day, I do want to have good things for my family, and that takes me working. And I also want to have good times with my family, so we'll spend time. We'll go to Disney, and we'll do, when the Star Wars Star Cruiser tour was open, I took my son. My daughter and my wife didn't want to go, so they went to New York and saw a show. I think we paid a lot more money than they did, which is okay, but it was fun. And so you got to carve that out, because I could have worked that weekend. And my kids are 12, and they're going to be 22 before I know it, and then they're not going to have time or interest in going out with me. So it is something you need to work at. But I think at the office we use time blocks, which is something Elon Musk does. And so we map out for everybody, and it's a little bit different. CEO is different than my CFP. You map out what your perfect week is, and then we have an office manager and we had a leadership team at the higher level leadership team figure out, okay, who should match and who should be complementary, so that if you have a client slot, I don't, and vice versa. And then the people that schedule, and Acuity or Calendly, I think we're using Calendly. Anyway, the software that does the scheduling, if you click and say, I want to talk to Fred, it only lets you pick the things that match the time block. And the time block would be, in a perfect world, what a perfect week would look like. And that time block includes time I'm not working, time with my family, executive time. If you ever look at any presidential schedule, it's out there on the internet. Not before he goes to a place, but kind of like as an archive. You'll see a ton of executive time with no other disclaimer. And so I put in executive time. I might meditate, I might go on Instagram, I might do whatever I want to do, but I'm not obligated. I might talk to my kids. Like and so executive, you have to put buffers in your day, because your email, or if you're working, your email or other people giving you things to do, that'll take up your whole day. And at this point, as the CEO of a large company, everybody wants to talk to me. Everybody wants me to see their product, and I could spend the rest of my life being wooed and taken out to dinner by sponsors who want me to use their product, and never see a client, because I'm out there, being asked to go play golf, and I don't. So we don't do much of that. I'll typically invite the sponsors to my office for a meeting to go over the product, because how many times do I need a steak with someone who's not my family? Like, I really don't I don't mind talking to someone, but I'd rather be home with my kids than having a beautiful steak with a guy that I know is trying to sell me, and he knows he's trying to sell me. So you got to work on it, you got to focus on it, because if you don't, your work will take over your life. And when you're younger and you don't have a family, that's one of the levers you have. If you graduate and you don't really have things tying you down, that's a competitive edge. And you could work 60 hours a day, your body would be fine. There was times I, worked all day, went out and partied till 2 a.m, and brushed my teeth and went to work at 7 the next morning, probably in the same clothes. I'm not recommending that, but easier to do when you're 20 and 30 than when you're 50. And at 50, nothing good happens after midnight. I'm not out there doing the fun stuff I used to do, because it's not fun anymore. I'm like, there's people, there's no cell phones when I was your age. There's none of this, going to be on social media forever and, take away your business because you said something 30 years ago.
So at the moment right now, like, what are your goals? Like, because you already like reached a certain level. So like, what are your goals right now? Like,
it's funny. Some people think that success and money is there's a version of it that it's enough, but those that are striving to make a difference, it's never about the money. Money is a score. Money helps. Obviously, I've had no money. I've had no money, and I've had money, and I like the one with money first. I think I have a chance, and I was, the analogy in my head is on the stage, and I keep moving away from the spotlight, and it keeps finding me. I was asked to speak at the conference you and I met with. I didn't solicit it. I didn't charge for it. I didn't get paid for it. And I asked why. Like, no matter who we ask, if it's about alternative investments, your name comes up. Like, that's the. I mean, I'm just keep my head down in Pennsylvania. Now we're in 34 states. So, what's next for us is I think I have a moonshot. I think I have a chance where retainer-based planning, which is a trademark I own on retainer-based planning, and just to give everyone an update, the normal industry with a straight face, and this was me, by the way, for 15 of the last 20 years, because I was I was a regular advisor with alternative investments. Find someone you like, they'll charge you 1%, they'll put your money in harm's way with stocks and bonds, and then they'll give you advice. And that's the industry, and that's how it works. So 5 years ago, I was having a cigar. That's one of my few vices. I was outside, and I pretended like I never left my Fortune 500 company, the one I left after Y2K, the one I left to join Edward Jones. And if I was still there, I'd hopefully be a CIO, maybe not CEO, but I'd be somebody, and I'd have a big 401k and hopefully have a big salary, but I wouldn't have any money to give to an advisor for them to charge and then give me advice. So I went to retainerbasedplanning.com. Nobody owned it. I bought it for 99 cents from GoDaddy. You would think even a lawyer would have owned it. Like, retainer-based planning is not a novel. I mean, I didn't make that word up. Everyone understands what I mean when I say it. The fact that nobody owned it was one of those, oh crap, maybe I got something here. So now I own retainer-based planning. It goes to our website, ccwmg.com. And that concept is simple, and I didn't realize how transformative it is. So I had someone call me for an interview. I'm like, why do you want to interview me? Like, don't you know? I'm like, no, I really don't. Like, I'm you know me. I'm a little, I have an ego, but I'm not conceited when it comes to what I'm doing. Like, I'm always looking over my shoulder saying, am I doing the right thing? Because I think I am, but no one else is doing it my way. So it makes it really lonely. And the guy's like, yeah, you're probably the next John Bogle. I'm like, whoa, that guy started Vanguard. I know it. I love him. He's dead, but I know what he stands for. I'm like, what do you mean? He's like, index investing, simple idea, but no one knew it was an option. Like, okay, I get that. What does that have to do with me? Like, I'm not. He's like, Fred, retainer-based planning is a simple idea. No one knows it's even an option for him. And then he asked me, how many people that you meet with that are, within our not a $45,000 Home Depot worker, nothing wrong with that, but that's not who's looking for retainer-based planning. But the people that kind of need it, we have like a 99%, like 99% people talk to, like, that's what I want. I don't want to have to give you money to get advice, because their money should be in maybe the real estate that they buy, fix and flip, or their own cement company that they own with your dad. Like, that's all real money and real wealth. But if I was at a brokerage account, I couldn't help them with that. It's you got to buy American funds for me, or go to Vanguard, and Vanguard's not going to give a cement company advice on their cement company or tell them anything about that. They can only give you advice on what money you've given them. So my goal is, if I can build up the practice long enough to outlive me, and if I can carve out some of the alternative investment space for creative capital. I'm not saying we want to be the vanguard of alternative investments, but I'm going to try. Why not? Yeah. Because this is my moonshot, and this is my one, Hershey. Because if you think about it, a lot of these, lifetime history companies were very simple. Hershey made chocolate. There's a lot of things like that that's out there, and I think I keep shying away, and I think this is the year that I'm going to lean into it a little bit more and be, all right, this is my chance. I'm not going to be stupid. I'm not going to buy stuff and hope people show up. But the amount of people that have referenced me, and we've had very famous people now that are clients of mine referring me other clients, and I'm like, oh my God, these guys have Wikipedia pages. I just saw her on the national news, and now I'm having a Zoom with her. So it's very, I call it a Forrest Gump moment. I'm like, what am I doing here? But I'm sure that's how Hershey felt, and I'm sure that's how Elon felt when he was, and I'm not saying, I'm not putting me up nowhere near that, but I'm sure at some point when you see something working beyond what you thought it would, and it's like, the tush push. Hey, no one stopped it yet. Let's keep it going. So I've hired 3 more people. We went from, I guess, 5 states to 34 states. We're in a lot of magazines now. We're things I would have paid for. I would pay to be in Forbes. Well, now Forbes.com pays me to write articles. I don't have the time, but I don't not have the time. Like that's something I got to do. Like that's something that, and it's not the Forbes Council where you pay for it. They're, again, I'm a paid contributor. That's something that they don't just give away, and it's an opportunity I don't want to miss. So I think if someone plays this 5 years from now and they know who I am, then I've done my job. And my job is just to do my job and let the world take what I have. The industry is bigger than I ever thought it was going to be. And we're seeing, we're growing faster than I expected. So we have to hire more people. I have a managing director now. Being the CEO of a one-man shop is just label only. And I wasn't, I was owner, CEO. We got leadership teams, and we have teams under the leadership teams, and we have, staff meeting. I don't have staff. I don't want to do staff meetings, but the fun stuff is starting to just happen. And the guy, Colonel Sanders was, I think, 78 when KFC started. So I'm only 51 now. I got a lot left in my tank, and now I know it works. So I can do things. And the funny thing is after a while, you're over the clouds. It's smoother sailing. We have clients that I don't reach out, like not even prospects, people that want to be clients, coming to us with the amount of money that was my book of business when I was at Edward Jones. And that's one person coming in, trusting us with $30 million. And it took me years to build up $30 million with 1,100 accounts back in the day. That's weird. And it's awesome, but it's also, I don't take it lightly, because this is all they have. That's their nest egg, and they're trusting us and my team. Everyone on the team is salaried. Everyone's professional. Everyone's, worked somewhere else. Like I don't have any new people here. My kids are 12. So they have to go work somewhere else, screw it up, and then come work for, us. Because I would love my kids to manage my clients' kids' money. Like to me, that would mean I've done something right. I've had the clients for years. The clients love us. Their kids love us. So that's where I think it's going, and that's where I'd like it to go. But it won't be the slide. It won't be the airplane taking off like it hasn't been before. But we'll pivot. And now I have a team where before I was a one-man shop. I have a team, and sometimes when you have success, it makes you more confident to make the moves to have success again. Yeah. So I'm taking bigger moves because I believe that it worked before at smaller moves. And I'm not being stupid with the moves, but we ran commercials in the Philly area during the Super Bowl. Now, you wouldn't have seen it outside of Philly, but I made fun of an investment company in one commercial. I made fun of politics on both sides in another commercial. And I did that so that I got some exposure, because if you're on the right track, but you don't move, you still got run over. So if alternative investments and retainer-based planning are where things are going, but no one knows I do it, MBA 101, I don't have an early adopter advantage if no one knows I'm doing it. So doing things like this, I don't know I don't know who's going to hear it. I don't know where it's going to play. Yeah. I just know life's a contact sport. And the more I can have contact with people that say, hey, you hit the Powerball, you might want to check out us. Or if you are, wealthy and you want to know all the other options and you think stocks and bonds aren't really where they need to be. And there's two other things that I've gotten a trademark for. One is your alternative for alternative investments. My company owns that phrase. I think that's worth a lot of money. But, I'll sell it to BlackRock for $100 million if they want. And then the other thing that we own is the trademark of, do you trust the market with your future? I think a lot of people, and that was my idea. That really comes down to, I think the makes alternative investments, interesting, is people don't just trust the market because they know it goes back down. They hear how, big companies get fixed, but everyone loses money, or one company goes bankrupt, but the CEO just moves to another company and, he's fine. That's not fair. And so, you got to go where the money is, and that's not really going to be stocks and bonds forever.
So this is pretty much the last questions.
That's okay. I love this. I told you to ask me anything. You did.
So this is going to be the last question, and it's going to be, so what philosophy do you live by? Like something that people can pick off of, or they can use that as advice and just boost their career, just young people.
Yeah. So I'm probably gonna piss off everyone in my office. I am working on a TED Talk and a book, and I'll tell you the last page. I'll tell you, and again, buy the book or listen to the TED Talk. But something I realized, because at some point in the last 4 or 5 years, I questioned how I got where I did. Because I was doing the same thing for 15 years before, and I wasn't writing for Forbes. I wasn't getting Citizen of the Year. I wasn't. This in a couple weeks. I'm for my alma mater, my college. I'm getting a Distinguished Alumni Award. I got a Boy Scout award for something. I got Doors of America. Like we're getting all these crazy awards, and our financial backing of our clients are bigger. You know, people are other advisors like, dude, what the hell are you like? Did you sell your soul for the devil? Like I see you everywhere. Everyone talks about you. At the event where I met you, I had a sponsor come over and he put his arm around me. I was like, I have to thank you. I'm like, what do you mean? He's like, I bought my first house because of you. I'm like, what are you talking about? He's like, you gave me my company, the company you worked for, he's a sales, so much money of our, you moved so much money to our strategy, which is a great strategy. I hit my bonus and I got a house. You made, I didn't give him enough, but that's weird. And so looking back and seeing how did I get here, 3-step process, simple but not easy. Be a contrarian, be right, which you don't control. And then the third one is take massive action. So I've been a contrarian my whole life. It's only recently worked. Like that placemat advertising, that's a contrarian. Leaving college to go sell placemat, that's an alternative. I mean, maybe not taught, but that's an alternative to where things are. And I've always realized, and the funny thing is, again, I worked at a Fortune 500 company, and just as an example of what most people don't realize is happening in life, I could not leave on a Friday until I went on the mainframe and made it run a program and send it to another called a node, but I had to send it somewhere else. And I didn't know what I was doing. Like I was given like a 15-step, like do this, and then send it. But I couldn't leave on a Friday, even to go down the shore without doing that. And I asked my boss, I'm like, what is this for? It's like, I had to do it, you have to do it. Like, all right. But everyone else is leaving at 3:00 on a Friday on a summer, and I'm like, I can't. So I asked my boss, I'm like, hey, can I find out what this is for? He's like, sure, knock yourself out. So I finally, it took me a week to figure out, hey, who owns this node? And I finally found a guy. I'm like, hey, you don't know me, but I can't leave on Friday before I push up, He's like, I'm going to stop you right there. Stop sending me that goddamn file. I'm like, is it the JT file? I was like, yeah, John Thomas quit 20 years ago. He was a super Unix user at this company. And what I was doing by my boss was sent to another node that froze payroll for the entire company. This other guy, he couldn't leave on a Friday because out of nowhere, he'd get this file, which was the file I was sending him. He'd get this file that he'd have to delete and then leave. He's like, if you ever send me that file again, I will have you fired. I'm like, dude, I'm never gonna do that. So that's the kind of groupthink. That's the kind of, if I see, cows going in a direction, I want me and my clients to feel comfortable because they're going to slaughter to be the one cow walking the opposite direction with a little bit of a smirk. It is simple but not easy. When you are doing something different than the masses, try not wearing a mask when everyone else is wearing a mask. And you're like, dude, why am I wearing a mask? It's stupid. That plexiglass isn't going to do anything. But you have to do it. Take your mask off when you sit down, and then you can have your dinner. I'm like, that's not how this works. So that kind of feeling, but in the professional setting. So I had to go to my boss, and I was like, hey, good news and bad news. Like, well, what's the good news? I'm like, I don't do the JT file. He's like, what's the bad news? Like, for 17 years, you did something that no one needed. It's like, what do you mean? And I told him the story. He's like, you're kidding me. I'm like, no. So his boss told him to do it. He did it. He told me to do it. So I don't want people to just question authority and do the opposite and be a rebel, but definitely don't just chug the Kool-Aid. Like, look at it, taste it around, swish it around in your mouth, see if there's other things to drink. But I definitely, if you can be and you can be a contrarian at your W-2 job. Like you could say, hey, did you ever try this? Or what about this software? Have we ever moved from Excel to, Google, whatever it is? I'm not, again, but you have to do it smart, because if you are the smartest man in the room, your peers are going to hate you for it. And so it is lonely doing it the right way, and you got to be okay with it. And again, the longer I'm here, longer I'm alive, the less I care what people think. And maybe it's a flaw. I mean, I want my kids to love me. I want my friends to love me. But, if I think I'm doing the right thing and you don't, you're entitled to your opinion as wrong as it is, and I'm not going to fight you for it. I'm not going to try to convince you. It took me a while to get there because you want everyone to like you. And when you're in college, you're just told this is how it is. And it probably was how it was. It just may not be how it is now. So think contrarian. You don't have to be a contrarian, but think contrarian. and test it. Make sure you're right. So if you can be a contrarian and be wrong, don't bet the farm on the wrong thing. Placement advertising didn't work for me. There was probably 2 or 3 other businesses I tried growing up that, right thing, wrong time. And it's funny. I should have been doing more internet stuff. I love the internet, but I never thought of investing in it. I never thought of Netscape and all that other good stuff. And then the third one is take massive action, which is, do something with the knowledge. If you're a contrarian and it's right and it works, run with it, because someone else is just going to steal your idea. Or if you run with it hard enough, it becomes real. Because the last thing, and it's the one thing that it comes back to, the New York Times did an article about worldwide computer sales maxing out at 300 units, 300 computers a year globally, the year that Apple started. So Steve Jobs wants everyone to have a computer, the same time that the experts at the New York Times said, no, 300 for the most we're ever going to need. So and the world doesn't like to change. So if you are shaking, moving the shaking, it is lonely. There's a lot of peer pressure that goes against you. I have my own financial advisor clients like, dude, why are you doing alternative investments? I have friends say, why are you starting your own company? Go work at Vanguard. They're right down the street. You'll get paid well. Well, I'm doing okay. And my, and so of all my friends, I'm the only one that's self-employed. Everyone else has a job. I invited them out to fly out on a plane that a client lent me. They couldn't take the day off. Okay, well, who made the better life choices here, guys? Between me and them. So being a contrarian is lonely, but you got to be okay with yourself, and you'll be fine.
Amazing.
Thank you. This was fun.
Yeah.
Happy to be back. If you have anything, if any of your listeners send you questions, CCWMG is the website. There's a lot of information there. And then go to Forbes.com with my name, and then you'll see all my articles. And I think that'll give you way more flavor on what alternative investments are.
I'll actually have all those links in the bio, so everyone just click on it. You
the man. Look at that. All right. Well, thank you for having me. I hope this becomes a Pulitzer Prize winning podcast. And I'll be there when you get the award, when you get the whatever the Grammy is for podcasts. I'd like to be there for you.
Thank you. Yeah, it was a great podcast. Thank you for
Thank you.
Yep.
Take care, man. See you.